welcome to Free Lunch here at Zacks.
I'm your host, Ben Rains. U.S. stocks fell Thursday morning, reversing course from what had been a strong February, as it appeared that Wall Street had shaken off coronavirus fears. In fact, all three major U.S. indexes closed at new highs Wednesday. But new reports from China helped send the Dow, S&P 500, and the Nasdaq all down. China removed two top officials in the province where the virus began. This came after the number of new infections reported skyrocketed tenfold in one day. China's National Health Commission has now reported that over 1,300 people have died and there are nearly 60,000 infections reported. Beijing now worries that the halt of travel and businesses will have a significant impact on the Chinese economy. And this economic slowdown in China is now expected to impact the U.S. economy in the first quarter. A new Wall Street Journal survey showed that more than 80% of economists surveyed expect that the virus will have a small impact on the U.S. GDP growth during the first 3 months of 2020. Meanwhile, Jerome Powell spoke about some of these concerns during his 2 days of hearings on Capitol Hill. The Fed chairman said that the U.S. economy appeared to be in a strong place, but noted that any hits to tourism, exports, and the financial markets would impact the U.S. economy, saying, quote, "We'll begin to see it in economic data coming up fairly soon," but noted that, quote, "It's too uncertain even to speculate about what that level will be." In company news, Alibaba stock fell nearly 2% after the Chinese e-commerce giant said that the virus might have a broader impact on the world's second largest economy. Despite that caution, Alibaba's quarterly sales surged 38% Thursday to top Wall Street estimates, and its net income climbed nearly 60%. Meanwhile, Cisco's stock fell over 6% on disappointing guidance. The networking equipment giant said that an uncertain global economic picture has slowed some tech investment decisions. Elsewhere, Applied Materials stock popped over 4% after the semiconductor equipment firm topped Q1 earnings and sales estimates. Tesla made headlines once again Thursday for two different reasons. First, the electric car maker faces new SEC scrutiny over some of its financing and accounting practices. Plus, Tesla is looking to raise more than $2 billion from a new stock sale to help speed up production plans. And CEO Elon Musk has agreed to buy as much as $10 million worth of the new stock. Tesla shares fell over 4% pre-market on the back of the news, but are up over 2% through mid-morning trading. TSLA stock is now up over 85% in 2020. Looking ahead, Nvidia will report its fourth quarter fiscal 2020 results after the closing bell today. Shares of the GPU powerhouse have soared over 80% in the last 6 months. The climb has come despite 4 straight quarters of declining sales and earnings that come against hard-to-compare periods in the historically cyclical industry. But Wall Street and analysts knew that a return to growth was due. And our Zacks estimates call for the company's adjusted Q4 earnings to jump over 108% to $1.66 per share, with revenue projected to surge over 34%. And that does it for the news portion of Free Lunch, but stick around for today's new Zacks Rank #1 strong buy stock. Hello and welcome back to Free Lunch. Today we're breaking down why Perion is a Zacks Rank #1 strong buy stock. The company is a tech-based digital advertising firm and that focus on data-driven synchronized digital branding from display, social media, and branded search, working with both brands and publishers. The company topped our Q4 2019 earnings and revenue estimates on Wednesday, and we should also note that spending has been moving towards online for years. In fact, according to eMarketer, 2019 marked the first time that digital ad spending in the US topped traditional ad spending. And by 2023, digital ad spending is expected to account for over 2/3 of total media spending. So now we're going to jump into Perion. As always, I like to start with a look at the company's website. As we noticed, they're kind of a data-driven, tech-heavy ad platform. That's their business. They work with advertisers and publishers. They have 20 different locations throughout the world. That's the basic business platform. And as we mentioned, ad spending is moving heavily online. That's just where it's going. By 2023, it's going to be over 66% of all ad spending in the US alone. And as we mentioned, they also just beat our top and bottom line estimates on Wednesday. So we saw their Q4 revenues climb 9%, with total revenues for the year up over 3%. And we'll see that the next couple of years look even stronger for the company. And now I'm going to take a quick look at so this is their valuation chart, but I'm going to look at their performance real fast, and then we'll go back to their valuation. So we can see that over the last year, PERI stock, which is their ticker, is up about 180%, which crushes its industry's average of about 2% at the moment. And we can see that the last 6 months have also been very strong, 55% growth. And then just to give people a sense of where they have been over the last 5 years, down about 12%, which is below the industry's about 19% average climb, but we don't care so much about that. We're looking towards the future. So the last year has been good because they had a rough patch of sales, but they seem to be headed back in the right direction. We go ahead and take a look at that. We should also note the stock is quote unquote pretty cheap at the moment. It's trading at under $10 per share, which is sometimes fun for investors who are looking for those cheaper tech stocks that have room to grow. And now we're going to go ahead and look at its valuation picture. So along with its cheap price trading under $10 per share, it's actually trading at a discount compared to its industry in terms of forward 12-month earnings estimates. It's trading at about 13.3 times forward earnings at the moment, which is well below its industry's 24.5 average. And it's also below the S&P 500's average at the moment, which is at about 19.4. So you're getting a cheap stock trading under $10 and also a stock that's trading at a discount compared to its industry and the S&P 500 at the moment. So now we're going to go ahead and look at some of its estimates to see why it looks so strong at the moment. So for Q1 of 2020, we're calling for about 22% top line growth and then another 23% growth in the second quarter. And for the full year, fiscal 2020, we're calling for about 24% top line growth and then another 20% growth in 2021, all the way up to $387 million for this tech-focused digital advertising company. So some solid growth when we think back to this last year. They had just 3% growth on the top line. So some heavy movement in the right direction in terms of revenue. And then if we look at earnings, they're also headed in the right direction. We're calling for 140% growth in Q1, 26.5% growth for the year, and then another 19.4% growth next year. And since they just reported Wednesday, they could see more of these estimates head in the right direction going forward as more analysts put in their new estimates. So these are from when before they reported their recent results, but we can see that they crushed our results yesterday, or estimates yesterday on the bottom line. They reported 22 cents per share when we were calling for 16 cents per share. And this is part of a really solid bottom line beats. They beat by an average of about 88% in the trailing 4 quarters. So bottom line beats, their earnings are headed in the right direction, the revenues are headed in the right direction. And we can also see that they, as we mentioned, They have solid valuation, so they have an A grade for value, an A grade for growth, an A for momentum for an overall AVGM score, and they're trading at about $8.50 per share. They're a strong buy, so there's a lot of reasons why Perion stock might be worth taking a deeper look at because it's cheap, it's also offering pretty good value, got great growth in an industry that's only headed in the right direction. So that does it for today's episode of Free Lunch. Make sure to also check out our new Zacks.com/promo page for a look into some of our services, portfolios, and more. Also make sure to tune into Paper Traders, which is live at 11 a.m. on Wednesdays. Once again, I'm your host, Ben Rains, and we'll be back next time with more up-to-date market news in a new top stock pick.